Hello everyone and welcome to my channel, and today this is my very first video that I put into my YouTube channel. And as you guys can see in the screen, this is a trade recap video. I want to share you guys about my second trade that I executed in this morning, and for you guys can get some experience, some new idea, and also know about my strategy on this channel. So this is on the gone pair on the gone trade, and at the first time that I look at the screen, I can see the price rejection with a very solid doji candle on the H4 fair value gap right here. Fair value here. The reason why I don't use the trade on this gap, on this H4 fair gap, because it is no rejection. What I need is the rejection to show that the buyer, the seller stop, and the another one come to the market to move the market. And this is when I can trade, I can speculate the market. So when the first candle of the day from the 5 a.m. to 9 a.m. show a good rejection on this fair value gap, so my bias is in the bearish on the bearish move. Then I can go to the smaller time frame to speculate the move of this H4 candle. And the principle of this strategy is easy to understand. This is the multi time frame that I can use mostly H4 hour and 15 and 5 minute time frame to execute a trade, to find a daily bias to execute a trade. And that's it. This is what it is. So when I can see the rejection right, this one, and I move to the lower time frame on 15-minute time frame to find the smaller fair value gap, to just consider that the trade is on my favor, which I need the impulsive move of one direction, which means it can create a new gap on the smaller time frame based on the trend on the higher time frame. I can understand this one as the entry gap because I can saw it on 15-minute time frame. But mostly I use 15-minute time frame for my trade because I want keep things simple. I a day trader, so I want to keep things simple, just enter this trade. But now when I can look at the chart more frequently on this morning, I can find that if I look at the chart at the 15-minute time frame, maybe I can miss this one at this level. I execute it. Maybe I can miss the limit order this one, so I market execution on this trade. And the trade I took on the 5-minute time frame from the entry gap right here. It's the same entry gap with the 15-minute time frame, but with more candle for more confirmation, for more layer to confirm that okay, I will execute this trade. And the reason why I use this gap, I can see this gap at a strong level, which means I can have the empty the volume and have a gap right here. This is insane. This is just a simple reason in reality that the seller sell off the market from this level to this level, create a very impulsive bearish move. When then the market break the trend line right here and come back to for the pullback. And I want to have the volume. Well, there's no volume. This is just the channel price. So at the zone right here, it could have so many limit order one to continue to sell off the market. So I don't even execute a trade by the limit order to put it here. I execute when the price show a good confirmation on the price action to execute a trade. When the 5-minute time frame candle right here show a rejection of this gap, so I execute a trade when the next candle open around 1 minute and I execute a trade. It just need 15 minutes to hit the first level of my profit. The reason why I have so much the reason for me to have so much level to execute, because I don't know the trade cannot break this level. It maybe it hit to feel the liquidity right here to keep continue to go up, for example. Because I have the profit right here, I want to put myself into a safer situation where I need to have something when I have the profit. I trade based on the zone, have a clear plan where I execute, where I get out of the trade, and the level 1 I scale off my 50%. The reason for 50% because I want to the left one can run. For example, I still in the trade on this move to capture another this move where I can make the money. I have on this trade I have 3 level to TP. Next one fail, and the final one is the full TP at this level. The reason why I want to full TP right here because at this zone you can see a new bullish fair value gap on the H4, so I don't want to counter the trend. I just trade based on what I see on the screen, and I can capture around 10 price of the zone. That is enough for me. Yes, and we create a new gap, and now I just have around 25% of my beginning size of this particular trade. So I just move my stop loss into the new gap that I run the screen. Now it can hit my full TP, or I can get out of the trade with a small level of safe stop loss. I'm still in profit. When I win, I win the key of this strategy is just win a little longer and a little safer. Have the profit, take the profit, and let the market run into the next level, and at next level maybe it can break a retest, it can break a retest, like boom. So this is important to understand. So I just say you guys, this is a very solid trade for you guys my channel to understand my strategy and also gain some experience, gain some perspective on how I manage and how you can manage the trade in the future. Because some trade I put my TP at here and I hope the market to go well onto this level quickly. No, that's not work. It costs so much mentality to deal with this situation, because when I break down the TP level of like level 1 and level 2, I feel like, oh, I win this trade, this level I win, this level I win. So the full TP or also the new stop loss hit, I'm still in a win profitable trade. That's it. That is the main key idea that I want to share you guys on my entry of the rejection, and also my how I manage the trade for you guys to gain some new idea about the market in the future. Thank you for watching and listening. Peace.